Welcome to the Borough Park Jewish Community Council's COVID Conversations, an ongoing series of vital information and guidance by top professional experts to help the community with setbacks and challenges due to COVID-19. In this series, we will be discussing guidance and information on legal and accounting, on medical, on mental health, on businesses that are struggling from COVID-19, just to name a few. And this will be an ongoing series in the months to come. Today's presentation is in conjunction with Dina, and you will be hearing expert advice by Attorney Benjamin Goldburd, who will be discussing PPP, EIDL, and other stimulus-related funding matters, time-sensitive information as we near the end of the year. On our first series in the COVID Conversations, which will be focused on legal and accounting, Attorney Benjamin Goldburd will be joining us live and will be addressing any questions that you may have on today's important presentation. You can share your questions with us at info@bpjcc.org. Attorney Benjamin Goldburd is partner at Goldburd McCone LLP. Benjamin Goldburd joined the firm after working in the accounting and private equity fields. He received his JD from Fordham University School of Law, where he served as a student attorney for the university's tax clinic and obtained his Bachelor of Science magna cum laude in accounting from Brooklyn College. I am delighted and deeply honored to present to you Attorney Benjamin Goldburd.
My name is Benjamin Goldburd. I'm a tax attorney in New York City, and due to the coronavirus outbreak, the government put out numerous programs that kind of align very well with IRS compliance and enforcement, and for that reason our firm took over doing a lot of compliance work with regards to the PPP and the program EIDL. These are programs that people are unfamiliar with, both across the board because they are new, and also their professionals that they're working with are unfamiliar with them as well. So it's a good idea to run through some of the simplistic natures of each program. That way, if there are mistakes, maybe they can be rectified, and if people have done things that they're not sure about and whether they're right or wrong, maybe something in this information can be helpful. So to start off, what was the purpose of the programs, the PPP program and the EIDL program? To start with the PPP program was designed to supplement unemployment. It was designed to help small business keep their employees employed throughout the pandemic so that they would not go on to unemployment. For that reason, if you are taking unemployment, you can't receive PPP. So the focus throughout the entire law is on employees. Even though it's there to protect small business, the idea was to protect the employees from being fired or furloughed. So for that reason, it's on employees that are employed by organizations less than 500 predominantly. There are certain exceptions. So we're talking small businesses from 1 employee to 500 employees, but it can also be self-employed individuals, independent contractors, Uber drivers, and the like. So the question is, what can the PPP be used for? Can it be used for buying inventory? Can it be used for investing in your business? Can it be used for anything else other than employees? The answer to that is, in some respects, yes, in some respects, no. For the most part, at least 60% of the PPP funds that a business receives needs to be spent on employees. And that means both wages, health insurance benefits, pension plans, and the like. 60%. 60% of the funds needs to be spent within either 8 weeks from disbursement or 24 weeks from disbursement. Those are the cutoffs. That is the first line of offense that any SBA checker or auditor will look at in order to see whether your loan was completed properly. For the 40% additional expenses, it can only be for rent or utilities. There is a part of the CARES Act which set up the PPP that allowed for working capital. However, the PPP program only stated that for forgiveness, 40% needs to be for rent and utilities, gas, electric, and the like. There's a question as to whether it was improper use or whether you could just not be forgiven. But definitely, if someone that took the PPP is looking for forgiveness, having bought inventory, having bought machinery, that's not going to qualify to get that forgiven. So obviously, real estate renovations and capital improvements in real estate, they don't apply. In fact, real estate itself is a ineligible industry if it's passive investment. Passive investment is almost every single real estate owner, unless you're living there or something like that where you're considered an active participant in the building. You're a passive owner and therefore do not qualify for the use of PPP funds at all. Those that applied for it, it's an ineligible industry and therefore they would have to return the funds. Any use of it is fraudulent. There is a question as to whether if you have a separate management company that it can be used for the employees of that management company. And the reason for that allowance possibility is because typically the SBA does not allow these types of loans for real estate because they're worried that even if you're going to really use it on your superintendent, the money will be commingled with other funds, and therefore they won't be able to track what was used in a business, what was used in the building, and what was used for the employees. If you have a separate management company, we know that the management company is not investing in the real estate. They're only paying their employees. So therefore, if you have a separate management company that is lending out their employees to manage the properties, then there's an allowance there for the PPP funds. Now, what are certain eligibility requirements to be in the PPP? Number one, it's got to be a small business. As we mentioned, less than 500 employees in general. There are certain exceptions, which we don't need to go into here. At the start of the PPP, they needed what's called liquidity. Liquidity means if you have funds in the bank, you do not need this loan. Now, what does that mean? For $100,000, $200,000, $1 million? It means whatever a company needed to run during the period that you took the funds for. So for, let's say, 24-week period, were you able to run your business with the money you had in the bank? Or were you able to go to another provider, another bank? If you had a line of credit at a bank, you should go there first before going to the PPP. The PPP program, however, came out and said that for any disbursements to borrowers that is less than $2 million, they are effectively waiving that requirement. They are considering it as if everyone under $2 million did not have other avenues of funds to get from. Everyone. Now, can they pick and choose where they want to change that? Absolutely. If they see something wrong, they can decide that you really did have the ability, and just because you were at 1.9 million when you applied because you knew of that distinction, it doesn't mean we're just letting you skate by. They absolutely can do it. What it's meant for are the people that are the companies that needed 200,000, 300,000, that clearly they're not able to go to a big banking institution to quickly get that rush of capital that they required. Another aspect that's very important is that an entity needed to actually be operating, and it needed to have been created by February 15th of 2020. So many people have thought that if we just have a company that didn't do anything, it would be okay. I have an LLC, I will just apply. That's not the case. If you have an LLC that's not doing any business, you can't take the money. You can't just say, oh, I'm going to start having salary now and I'll give 60% to my family members and my friends because I have a company that got $200,000 from the PPP because I was able to make the application work. They will be able to figure that out because your payroll documents go to the government. your income documents go to the government. They can very easily see when an LLC, when a company, when a C Corp or an S Corp was actually operating. And if you did that, they will 100% come after you. Another very important part about the PPP is maintaining your full-time employee levels. You have different periods when you applied for the loan for when your employee levels were and what you applied at. You have to keep to those levels until at least December 31st of 2020. If your average levels over the period are 40 employees and you let everybody go, and even though you hit the 60% mark because you paid everybody a lot of money, but you only have 25 employees, they are going to reduce your forgiveness on each employee proportionally for those amounts, because like I said at the beginning, the whole point of the PPP was to keep people hired. You didn't keep people on your payroll. That means you didn't deserve the PPP only up until the employees that you had. That is the first thing to think about, as I said at the beginning, about the PPP. It's employee-centric. Another very important point is that there are certain ineligible industries. We mentioned before, real estate is one of them, hedge funds, gambling organizations. These are other ones that just because you have employees and you can kind of make the cut in other reasons, you are still deemed ineligible by the SBA and the CARES Act. One big question is, you're taking government funds for employees, then can an owner pay themselves? Yes, owners can pay themselves. There is a limit to how much you can pay any employee, which is up to $100,000. And owners, self-employed, S-Corp owners, LLC owners, they can all pay themselves up to, typically, if you took the 8-week option, around $15,000, and up to, for the 24-week, up to around a little bit over $20,000. Another question that has come up is, that's great. I applied and I have and I've hit the 60% mark and I've paid my rent and my utilities with the 40%. How do I prove that? What is the SBA going to look for? And the best way to think about it is like any audit. When you go to your accountant, you have to provide receipts. You have to provide documentation. So payroll reports are going to be the most important thing because you have to hit those marks for 60%. You must show who was hired, how much you paid them throughout your 8 or 24-week period. You also have to show that you kept your levels through the period, and you can make up that time, as I said, even if during the period you did not have all your employees back during the 24-week period, they give you a makeup time until December 31st in order to make up your full-time employees be back to be hired. Now, if that's the case, many people have asked, well, I'm able to apply right now. I'm able to apply for my forgiveness on my loan right this moment. Some banks are allowing it already. So should I apply? Well, here's the question. Do you have all your employees back and hired? If you don't, then just because you finished the 24-week and you paid your 60% and your 40%, you're going to apply and they're going to knock off money. Why do that? Wait until you've gotten everybody back, hire people to be back, bring your levels back from 25 people to 40 people, and then apply. That way, your forgiveness is not in jeopardy. Don't jump the gun because you want every duck to be aligned before you actually apply for this. Now, obviously, for another question that comes up is for those that are in the higher balances. You took $1 million, you took $2 million. You're worried about liquidity. You're worried about whether you could have handled the pandemic without the government's assistance. For those borrowers, you should have a written compliance document that shows, as of the date that you applied, what your business looked like. Your bank records, your employee records. If you have any emails from vendors or contacts that said, well, we're going to be delayed in paying you. It's going to take me 3 months, 5 months, could be 6 months to a year before I pay you. Even if you're a large business that has a lot of employees and you possibly could have weathered the storm because you had $1 million in the bank, but if your run rate for the 24 weeks if nobody's paying you or nobody's allowing you to deliver your goods, means that you're not going to be able to collect, and you have a $3 million payroll, you can't possibly use that $1 million to pay your employees. You will go under. So that is a good way to show it. You have to have it by date. That way you did a full analysis, point by point, what your business looked like, so that you can submit to the SBA, this is what I looked like, this is why I had a good faith reason to actually take this loan. Not that just I said, look, free money, let me take it. The most important question to a lot of borrowers is, okay, I took the money, I didn't use it properly, or I knew I wasn't going to use it properly, what to do now? So those two questions need to be taken in part. If you never used it properly and you never thought to use it properly because you knew that you didn't have employees, you did it the wrong way, you were always going to just put it right in your pocket, right now is the time to figure out a way to get cash now to return the funds. That means that you filed something fraudulently with the federal government. It's a serious offense and it needs to be taken very seriously. Find other avenues of capital right now. Things are better now. Try to find a way to return the funds as soon as possible. If you do it quickly, there's a possibility that any retribution by the government will be slight and possibly there will be no issues in terms of jail time. If you ignore it, they will eventually find it because they are going to go through this with a fine-tooth comb and find those that did this blatantly fraudulently. And as I said at the beginning, it's going to be easy for them. People have this misconception that the government is going to be overwhelmed. And in typically these cases, they're right. But in this specific case, there's intergovernmental support. There is a panel that is being put together of all different facets of the government that is going to be doing this enforcement, including the FBI, the IRS, and different banking organizations that is going to look at this for enforcement. You have to understand, the banks are involved here also. They get audited all the time by other establishments and other governmental agencies. All these industries are regulated and the government watches them. So the thought that just someone's going to skirt by, yes, of course, not everyone can get caught, but they are going to look at this from a very, very sophisticated point, and they are all going to be talking to each other. While in other situations, government agencies don't talk to each other, in this specific situation, they actually are, and they actually will, and they will share the information. So if you have a company that never made any money, and all of a sudden you took a $100,000 loan, a $500,000 loan, it's going to hit a red flag. A computer will spit out a report that says, this company never made any money, never had any employees, never had any payroll. Why all of a sudden do they have payroll that requires these amounts of funds? And if you apply for forgiveness on that, it's double fraud because you took it fraudulently and you tried to get it free fraudulently. So we're talking two different issues that they can come after you for. Now, here's the other question. The more innocent ones. You took the funds, you thought you would make it, you didn't make it. Unfortunately, there's not much you can do, but on the side of forgiveness. If you don't hit the 60%, it's a hard cutoff. 60% has to be for payroll. There is an appeals process. There's a possibility that even if you're denied, if you go to an attorney and you plead your case on appeal, there's a possibility that the SBA will make concessions in certain cases. Yes, that could be a case of 56%. That could be a case of 52%, not 22%. Not where you very much did not hit any marks and spent it all on your rent. But in that situation, all isn't lost. It's just now a loan at 1% for 5 years. So hunker down, be sure that you can pay the loan. It is a government loan. You want to be able to pay it because they can freeze your assets. But pay the loan. Go forth. The other aspect, obviously, is the full-time employee benefit, that you have to keep your full-time employees employed. As of now, you can still hire people back. You can still make good on that promise that before the end of the year, you're going to bring back all your employees to the average levels they were that you said that you would. So if you are behind, even 5-6 people, go out, recruit, and hire people that need jobs. That's the point of this program, for people to be working. It doesn't have to be the same people that worked for you before. If you don't like them, you can bring back new people. But the point is to bring back people. Now, another great question is, people say, well, I brought back people. I don't want to bring back people. I brought back some people that I like. There are some people that either I needed to fire for a reason, they were doing something wrong, or they told me they don't want to come back. Well, there's a way to do that too. If someone needed to be fired for cause, document it. This person who you had 50 employees, now you have 49. This person did something illegal. I needed to fire them. You document it on the day and you submit it with your documentation. There is a safe harbor for that. For the government, though, for many things, they didn't understand how businesses actually work, which is why there's so many confusing amendments to the PPP, but they got a lot of it right. They understand that there is a reason why some people cannot be hired back, and you might have to fire somebody during the period when you should have hired people back. In that situation, you can send in documentation to prove why this person wasn't there. If you tried hiring people back and they said, well, I don't want to come back. I'm getting plenty of money on unemployment. My unemployment benefits are better than my salary. I don't want to come back. Very good. Do that. Have it documented, showing a certification that you tried your hardest to offer people to get this benefit of PPP, which is supposed to keep people off unemployment benefits, and they chose not to take it. That's not your fault. You have to try, but if you tried and failed, the same thing goes. A lot of people have asked, well, I've tried. Nobody wants to come to work. That's fine. But did you have a campaign to try? Did you put out feelers? Did you put out ads? Did you have interviews? Document it. Document it. Paper is king in this case. Because in a situation like this, there's a level where you're going to submit your documents to a bank. And somebody at the lower tier of the bank is going to say, well, you missed the 60%. Well, you missed the full-time employee. Well, you missed the 40%. You missed it. I'm denying it. There's an appeal. There is an appeal process. You appeal to the SBA, and somebody at a higher level can take a look at it. And if you have the documents to prove why you did certain things, there's a very good possibility that you will be granted forgiveness. But don't have this idea where you're going to just remember things. This audit can take place next year. This audit can take place in 2 years. This audit can take place in 3 years. The one thing we know that the government has is time. They can do this for a long time, and you're not going to have the memory, and you're not going to be able to prove from memory what was done. Document it now. Put it in a special folder. Put it in a special box. Put it in a special part of your computer that shows each aspect of your business, why you made certain moves, and what you did. Now, another program that we mentioned at the beginning of this is the EIDL. A lot of people like to shorten it and call it the EIDL loan. So this loan is a much more straightforward loan in terms of the rules. This is a government loan. It's not forgivable. It has a regular interest rate. It carries certain personal guarantees that business owners have to sign for, and it's subjected to security of the assets of the company. Now, what can it be used for? This can be used for the working capital expenses of the company. So you can use it for certain parts of your operations, your expenses, your bills. The things that it can't be used for are long-term debt. You cannot say, well, I'm going to pay off my mortgage with this. I'm going to pay off the debt that I have on a piece of machinery for this. Long-term debt doesn't work. Your credit card statements? Absolutely. Your credit card statements are for your business operations, the thing that makes your business run. That's what the EIDL money is for. Something that people don't know is that you can't use the EIDL for the same thing that we use the PPP funds for. So it's important to note that while the EIDL can be used for certain things that are mixed, you want to be sure that the EIDL tickets are not used during the same period of usage for the PPP. If you're going to have PPP funds that are paying your rent and you're going to have PPP funds that are going to be paying for your utilities, don't use that with the EIDL. Use the EIDL funds at a later date and have the receipts be at a different time frame than either your 8-week or your 24-week. Now, there's been some confusion on the EIDL and how it relates to the PPP. whether the EIDL has to first cut out a piece of your PPP for forgiveness. And that's true in some part and not true in others. The EIDL had two parts at the beginning of the pandemic, and people forget this because it was a crazy time. At the beginning of the pandemic, there was a grant that was also called the EIDL. That was up to a $10,000 grant that said, this is yours. This is your funds. You don't have to pay this back. It's given to businesses just to help. Being that those funds are already free, they are already deemed forgiven, and therefore it's supposed to be credited against the funds you got from the PPP. So if you got $20,000 from the PPP and $10,000 from the EIDL as a grant, $10,000 of forgiveness has to come off that PPP amount of money, and you'll have to pay that back as an actual loan or return the funds. But the regular EIDL, that's an actual loan, that's up to $150,000 that people got, that does not have to be used to offset the PPP. That is regular money that can be taken as a loan and used for the operating expenses of the company. Now, kind of receipts and documentation is the SBA going to look for? The same answer applies as the PPP. Think of a tax return. Think of what you would normally do for an audit. You have your receipts, you have your spreadsheets, you have your credit card statements, your bank statements. These are the things that they're going to look for to show that you use these funds. For a lot of my clients, and this goes both for the PPP and for the EIDL, I advised opening up a separate and distinct bank account. People don't necessarily have sophisticated bookkeeping that is going to show what exactly the funds were used for. But if you have a separate bank account and a separate credit card, or at least a separate bank account that's showing these are the funds I used for that credit card, it's very easy to show this was used to pay for paper for my company. This, you see it on this date, and it's right there. You don't have to go through all the sophisticated bookkeeping requirements that they might be looking for. And trust me, they are looking for it. The IRS and these government agencies love to say ignorance does not mean anything to them. Just because you're a small pizza company that has 2 employees, they expect you to have real bookkeeping records. And that goes for taxes and sales tax and the PPP. They expect you to document this properly. Saying that, I do this on a piece of paper is not good enough for them. So at least a bank statement that is printed out by a banking institution that can show what you actually used it for, that's very helpful in proving what you actually did with these funds. Now, at the end of the day, what happens if you just did everything wrong and this is, these were all done fraudulently, you opened up companies and took EIDL funds for when you didn't need it, and there's no working capital that you can show, and you just spent it on your own house, your own mortgage, paid your pocket. The fact of the matter is, you have to start looking for counsel, and you have to look not just for someone like myself to help guide you as to whether or not you did this right or wrong, but you need to start thinking about criminal counsel, because if they can show that you willfully were fraudulent and did this on purpose and actually tried to defraud the government, then this is a straight fraud case, and the government will come after you very, very strongly. So what to do now? Get it checked. Take a look at the documents you submitted and see whether there's hope. There might be. Even if you're nervous, there might be hope to say, well, I spent it this way. Does it really look like fraud? Did I really do something wrong? Some people think like, oh, I had 2 employees and then I fired one and I'm never going to make it, so therefore, what am I supposed to do? No, there may be hope. You may just lose a little bit of your forgiveness, but it doesn't mean that you defrauded the government. There are levels to what is expected here, but definitely get it reviewed. Definitely, if you took these funds, don't just go into this blindly. Have a professional look this over. Your accountant, your attorney, have someone that will look this over and decide whether you have a problem or whether you just may not get the forgiveness that you're looking for, or you may have to return some of the funds, both from the EIDL or from the PPP. But trust me, returning the funds now and going to other capital avenues that can get you the funds and returning it to the government now is much better than waiting 2 years and then the government says, wow, you really didn't try to do anything, and you really did defraud us and we caught you. Come forward now, return the funds, and the probability is things will go away. There's so much of this going on in that regard that returning the funds, the government will probably say, okay, we'll move on. You're not our problem because you gave it back. And again, during the pandemic, during the height of it, people were scared. People did things that may not have been so smart or may not have been so kosher. But if you fix it now, at least you can say this was panic. I panicked. And things are better now, and you're able to get loans. Mortgage rates are great. Commercial loans are coming back. Banks are lending better. Investment is starting to pick up. There's no reason why you can't get other avenues of capital now. In those days, things were frozen. We understand people panicked, but to bury your head in the sand, that's never going to be the right answer. Take a good hard look at your application, be honest with yourself, be honest with what your business did with those funds, and have someone review it. Another question that's come up is the difference between employees and independent contractors. Now, this is a complicated issue, and on a video like this, there's just too many variables to figure out what an answer would be. But suffice it to say, employees are the focal point of the PPP program. So much so that the PPP program actually outlines that if you are actually an independent contractor and receive a 1099 instead of a W-2, you are allowed to take your own PPP funds. Self-employed individuals are allowed to take their own PPP money. They put in their earnings into the calculation, and just like an owner of a business, they're able to take that number of up to $15,000 for the 8 weeks or a little over $20,000 for the 24 weeks. They can take those funds themselves. But the people that pay them are not supposed to take the funds for their independent contractors. The independent contractors are supposed to do it themselves. Now, what can you do if that's just how your business works and you did that and you applied it and you were wrong? There's a good possibility that they will look at this and say, you can't really do that and you weren't allowed to take the funds, and we're disallowing this as a 60% violation because you didn't actually have any employees, you actually have independent contractors. So in that situation, you have two ways to go about it. Either you can deem all of your employees, all of your independent contractors as employees now. If they are all employees, then great, but that comes with a whole host of other problems, workers' comp and other aspects, withholding that you were supposed to be doing that you haven't been doing since the start of your business probably. And as I said, there is intergovernmental support here. So if you change something from 2019 to 2020, someone's going to notice. Another aspect that can be looked into, and again, it won't work for everybody, but if you have an operation that's predominantly independent contractor based, and because of that, it's all subcontractor, there is a possibility that you might be able to qualify as a payroll employment organization or a PEO or something like it, which is granted certain special powers by the SBA to employ people that are not really your employees. Now, technically, PEOs are not supposed to take the funds. They're supposed to just provide the records for those funds, and the actual owners of the businesses are supposed to take those funds. But in a situation of mismanagement, there's a possibility that the SBA may grant some leniency if the operation does coincide well with the rules of a PEO. Now again, there is a risk here, because if you're going to apply for the forgiveness, understand that if you are deemed employees now for the purposes of the PPP, in order to grant forgiveness, we go back to our first issue. The IRS is going to deem this payroll. If it's deemed payroll, you should have been withholding. Where are all your withholding taxes? Where are all your payroll taxes? Where are all your workers' comp? These things can snowball. So before you make any moves, have this be reviewed by a professional to see what the actual benefits are and the risk, because a risk of a multi-year audit for $50,000, for $100,000 of forgiveness just may not be worth it.
Thank you, Attorney Benjamin Goldburd, for this very important presentation. Reminder, if you have any questions on anything you heard here today or any other legal questions on COVID-related challenges, please share it with us at info@bpjcc.org. On January 10th, on the first day of our COVID Conversation series, Attorney Benjamin Goldburd will join us live to respond to any question that comes our way. We hope you enjoyed this program and we hope you share it with others. Thank you very much. See you on January 10th.